Good morning, Paul.
Good morning, Robyn. Can you hear me?
I can hear you great. Can you hear
I
me?
can't, Robyn, I can't hear your voice, and not sure why my camera is not showing up. Let me make sure I've got the right camera on. Well, I'm not sure why my camera is not on and why the sound isn't playing, but we'll. If folks have their chat screen open, if you can just indicate if you can hear me as part of the program. I can see and hear you. Okay, so folks say they can see and hear me. Robyn, I can't hear you. Maybe if you can maybe say a few words. Can you all see and hear Robyn?
Can anybody hear me, guys? Well, let me see here.
Well, you know, these kind of technical difficulties happen when we use technology. So I appreciate you all confirming that you can hear us. Perhaps we'll be able to figure out a little bit more here what the issue is with the sound, but we will continue on. Good morning, everybody, and thank you for joining us this morning with this presentation about small business relief. We're going to focus on loans, leave, and levers that we think you as business owners are most interested in and can find the most information about. So first of all, I want to introduce my co-host for this program. Even though I can't hear her, I can see her. I'd like to introduce Robyn Pye. Robyn is our partner who runs our Katy, Texas office. And Robyn, I would imagine you're running the office from home like most Americans are today.
Yes, I am. And I know you can't see and hear me, but our participants are saying that they can see and hear me when I talk.
So, Robyn, I'm not, since I can't hear you, let me ask you, you know, Katy, for those that aren't familiar where Katy, Texas is, Katy's about 20 miles west of Houston. It's a, I guess it used to be called a suburb. Now it's a community in its own right. Houston, of course, being notorious for their freeway system. Let everybody know kind of what's it like in Katy and Houston right now compared to maybe what it was before this whole virus.
Yeah, so the streets are pretty empty. The walking trails are pretty full, so it's a little bit of a 180 for us. I do think people are for the most part staying home and not getting out unless they need to. So a little desolate feeling out there.
And of course, up here in Estes Park, we're a remote mountain community to begin with. This is our off season when we don't have a lot of people here to begin with, but it's definitely a lot quieter and very few cars on the highway, very few people out. So these are strange times we live in. And let's talk about what's happened over the last 2 weeks since this happened. You know, I think I'll always remember March 13th, Friday the 13th. That seems to have been the day that everything changed within a couple of hours. We saw schools closing in both our Texas and Colorado office regions. We instructed our team that weekend to shift to working remotely, and they picked up their items and took them all home, and we were back up and running by noon on Saturday. Since then, we've seen an increasing number of these stay-in-place orders at both the local and state levels, and certainly that's happening here in Colorado as well as Texas and a lot of other areas. March 18th, Congress passed and the president signed the Family's First Coronavirus Response Act that provided paid leave and sick leave for folks impacted by the coronavirus. The next day, March 19th, was when Majority Leader Senator Mitch McConnell introduced his $1 trillion stimulus package. And it was just this past Friday that Congress passed and the president signed a $2 trillion, what they refer to as the CARES Act, into law. I've got a copy of it. Both Robyn and I have a copy of the text of the law, and it's 880 pages long. I don't know about you, Robyn. I don't think I'm 10% of the way into that bill.
No.
but that's what we've been spending all weekend and yesterday trying to get our arms around it. So today, we're going to provide to you what we know. And we're going to provide some suggestions as far as what we think business owners should do with this information. But this information is still being evolving. We're getting almost daily updates from IRS, Department of Labor, SBA, the Treasury Department. And so we're trying to synthesize those updates into the information that we know. And this will be a continuing learning process for us that we will continue to share with you as well. I do want to encourage you. We have Q&A and chat features during this presentation. Teresa is off to my left, off camera here, and she is monitoring the Q&A box. And I believe, Robyn, you have the chat box open on your end. So we're going to be monitoring those things. Robyn, I may just, if you need me to stop, you may just need to raise your hand. I can see a thumbnail image there. You may just need to raise your hand, tell me to stop talking.
Okay.
And we'll try to make this somewhat coordinated. So, you know, the main emphasis of this presentation today is relief for small businesses and small business owners. But I know it's really top of mind, some of the changes in the CARES Act that impact all of us as individuals. So I just wanted to take a minute and cover some of this information. Perhaps the most popular item that's gotten the most press are these recovery rebates. The IRS, I saw yesterday, called them something else, economic impact payments, I think. So they're coming with various names, but it's basically $1,200 per adult, $500 plus $500 per child under 17. The IRS will utilize your 2019 tax return and the adjusted gross income reported on that return to determine how much of that payment you qualify for, because there are phase outs once you get above certain levels of adjusted gross income. If you have not filed your 2019 return, the IRS will reference your 2018 tax return for that adjusted gross income figure. And so we've had some questions about, well, how does the IRS know where to send my money? And the IRS did issue some guidance yesterday that they are going to utilize direct deposit information that was on your 2019 or your 2018 return, which then raises the question, what if you've never used direct deposit? And the IRS indicates they are going to create a portal here within the next week or so that everybody will be able to go online, either furnish bank account information or update bank account information so that you can have those funds directly deposited to your bank account. So be on the watch for that, and we'll be on the watch for that as well and trying to get that word out. The second item is, what if you've never filed a return for 2018 or 2019? You might be a senior citizen that receives Social Security and hasn't had to file a tax return. Or you might be a grad student still going to school and not making enough money to file an income tax return. The IRS did indicate yesterday they will be creating another portal for folks to be able to go online, submit some really simple information, and get that tax return filed. Robyn, you want to talk about the RMDs for a little bit and the penalty-free withdrawals?
Yeah, sure. So Paul, you called this one last week. I think it was back in, I don't know, years ago when we had another, past economic crisis. The IRS suspended the requirement that you take a minimum distribution for those taxpayers over age 70 and a half from their retirement plans. So that is the case for 2020 as well. Excuse me. So you're not required to take those RMDs in 2020. Taxpayers can also take up to $100,000 out of their retirement accounts, even if you're younger than 59 and a half, and those distributions are not subject to that 10% early withdrawal penalty. In addition, you can either choose to repay that over 3 years and put the money back and not pay income tax on it, or you can pay tax on it over a 3-year period.
I take it you're ready for me to go. Okay. I did have somebody say, consider using your cell phone so we can hear each other. That might be, I don't know if that's going to create a lot of feedback, but we can certainly try using that.
If you'll turn yours on, I know you had turned yours off.
Of course, I turned my phone off, so
right.
I didn't want anything coming in. So we'll make this work.
Okay.
I'm going to jump into the unemployment benefits. There's 2 items I wanted to point out on that. As part of the CARES Act, they are providing an additional $600 a week. They are providing an additional $600 a week for unemployment benefits through July 31st, 2020. This will be added to your unemployment benefits that you would already qualify for under state law because those unemployment programs are administered by each of the 50 states. But the CARES Act the Treasury is now going to infuse more money to each of the states to increase those unemployment benefits by $600 a week through July 31st of 2020. And now again, depending on state law, how much of that applies to you, it could be different. If under your state law, you're entitled to 13 weeks of unemployment, then you may not make it all the way to July 31st, but other states do offer more generous unemployment benefits, but the $600 a week cuts off at the end of July. The other item to point out here is typically self-employed individuals, folks that file a Schedule C on their personal tax return. Those taxpayers don't pay into state unemployment systems. They don't pay in taxes for unemployment and therefore are not eligible for state unemployment benefits. The change that this creates now is those individuals can apply for unemployment with their state agency. They will not qualify for state unemployment, but they will qualify for the $600 a week federal unemployment through the state agency. So they really have opened up opportunities to infuse cash into the system, whether you're a traditional W-2 employee or you've been a self-employed business owner. So that's a big change there. And then the last item is they did create this new charitable deduction. We refer to it as an above the line charitable deduction up to $300. That means you'll be able to claim that deduction on your 2020 tax return regardless of whether you claim itemized deductions or the standard deduction. This will be a charitable deduction available to everybody on their 2020 tax return. So with that, let's jump into the new loan programs from the SBA, and this continues to be a very evolving situation. So let's talk about where we're at. The two that we're going to focus on today from the SBA are the economic injury disaster loans and the Paycheck Protection Program. That's the new one that was contained in the CARES Act that went into effect on Friday. So let's compare and talk about those. If you participated on this webinar last Tuesday, I did go through some information on these disaster loans. And so some of these bullet points are unchanged, but I did want to point out the one there that has the new item on there. The SBA did release a new website for these disaster loans, an extremely streamlined process to apply for these disaster loans. And I've got the website address there. They released that either on Sunday or maybe Sunday night or Monday morning, and it is there. Our experience so far for ourselves as well as some of our clients is it takes about maybe 15 to 30 minutes to complete that application and at least get yourself in line. So if you're able to watch this webinar and also access that website right now, chances are you will complete your loan application and listen to this webinar, and by the end, you will be done. So if you want to try to do two things at once, that opportunity is out there. One thing to let you know is this is a self-generated online loan application process. So this is something that you start, you complete, you prepare, you submit. It does not require a third-party lending institution. And so Teresa reminded me that if last week you went on the old system for disaster loans and put an application in there, you need to come back to this new online platform and reapply for the disaster loan assistance. And I'm going to get into a very important reason why you might want to go online right now and begin this process. Again, some of these bullet points from last Tuesday are still here about, you have to show ability to repay, you have to have a credit history. So these loans are going to require collateral, personal guarantees, those types of items like a traditional commercial borrowing would entail. But the new item, the item that came out of the CARES Act on Friday is through this disaster loan application, you can request a $10,000 emergency advance. And we have a question that just came in: are these disaster loans forgivable? And the answer is no. We'll talk about the Paycheck Protection Program loans in a minute that do contain a forgiveness feature in them, but these disaster loans are not subject to those forgiveness provisions. But again, you can go on that disaster loan application. Again, might take you 15 to 30 minutes to fill that out. You get to that point, there's a little box that you check that says, I request a $10,000 emergency advance. You hit submit, provide your bank account information, and we've been told that that $10,000 will be funded into your bank account within 72 hours. We'll find out. Teresa submitted our application first thing yesterday morning, so we'll see if our $10,000 shows up on Thursday. But again, you could do that all right now while we're having this webinar, and by the time Robyn and I get done, chances are you've submitted your $10,000 application. Robyn, anything to add that I might have missed on that?
Yeah, so a couple of things. I see that some people are posing questions through the chat, and I'm trying to catch as many of those as possible. If you could ask through the Q&A so that we can track those. If we're not able to answer them while we're online with you today, we will certainly get back to you. And I think some people are getting confused. This loan you apply online directly with SBA. This is the disaster loan. The PPP loan that we're getting ready to talk about is something that you'll go through your lender, your bank, to begin that process. Go ahead, Paul.
Okay, Robyn, I'm going to look forward to listening to this recording later to hear what you said. So, because I'm not very good at reading lips. So thank you very much. Somebody said they need that link again. So let's go back real quick. There's the link highlighted online. So Trish, I hope you're getting that information. If y'all want to jot that down real quick, we'll have that.
So there's a question here too from Andrea about the interest.
It's interesting. Somebody asked, what's the interest rate on the 10K? So Robyn, I'm not sure if you indicated what happens if you don't follow through with a disaster loan, or what happens if you get the Paycheck Protection loan. You want to talk about that a little bit?
Yeah, so let me talk about that real quick. So if you apply for the emergency $10,000 and that's all you do, you don't ever then apply for any other part of the disaster loan or the PPP, our understanding is that $10,000 is forgiven. Now, if you get the $10,000 and then you apply for the PPP loan, it gets consolidated. So it will essentially reduce the amount you get through the PPP. So, and if you continue on, if you get the 10,000 and continue on with the disaster loan, I believe that interest rate is 3.75%.
Okay, we did have another question that came in about the SBA application for the disaster loan that it asked for the amount of loss. It's important to understand that particular question relates to property damage. This disaster loan program with the SBA has been around for a long time. It gets resurrected every time we have tornadoes, hurricanes, earthquakes. And so in many of those cases, those loans involve property damage. So in this economic injury disaster loan, there is the question in there about loss, but that's referring to property loss. And so what you're looking at in this particular loan application is economic loss rather than a physical property loss. There was also a question if the $10,000 was forgivable or non-forgivable. Robyn, you may have touched on that in your answer, because by its per se, the $10,000 is not forgivable. But let's say you decide not to pursue the disaster loan. Let's say you decide not to pursue the Paycheck Protection loan either. You just don't need to go any further. That $10,000 does not have to be repaid. Now, I assume the SBA would be happy if you voluntarily repaid that $10,000, but under the CARES Act, you are not obligated to restore that $10,000. And Robyn, you may have mentioned if you go on and get the Paycheck Protection loan, then that $10,000 gets refinanced into that loan as well. So let's keep going. Teresa's over here pointing to me at Q&A, but let's continue to to go through this presentation so that we can get this information out to everybody. Okay, this is the new loan that came out as part of the CARES Act on Friday. Paycheck Protection Program loans, we're referring to them as PPP loans. Loans are up to $10 million. The key feature here is the maximum amount of the loan can be up to 2.5 times your average monthly payroll expenses on a trailing 12-month period of time. Robyn, you want to talk about what payroll means, because there's a lot of elements here in terms of what folks are going to have to consider
Yes.
in terms of what's payroll.
Yeah, so a couple of things on this. So payroll includes health insurance benefits that you're paying on behalf of your employees, and it also includes retirement contributions, retirement plan contributions that you're making on their behalf. Payroll also includes 1099s to independent contractors, not for the people that clean your office or your attorneys or your accountants, but for people who would otherwise be considered employees. So if you're in an industry that's heavy 1099 worker, and light on the payroll, you can include that 1099 compensation in this calculation.
Okay, so I'm sure you talked about the 1099s. So, and I don't know if you clarified that, but you know, the 1099 you send Mueller, Pye and Associates for the accounting fees you pay for us, those 1099s will not count. We're talking about the 1099s that you send to people that are working for you. We have some other information there about loan interest rates, and this is a 10-year maximum term compared to the 30-year maximum term for those disaster loans. And you know, one of the few qualifying conditions is you had to be operational as of February 15, 2020. I think the intent there was if you were not a going concern at that point in time, then the SBA and the government don't want you resurrecting yourself, getting this money and then disappearing. So they want to make sure you are a going concern as of February 15th. One of the important things to understand about the Paycheck Protection Program, and this is a pro and a con. This is part of the 7A loan program that the SBA has, and there's numerous loans that fall under the 7A area. The good news about that is the lender, your lender, will oversee the entire loan process, servicing, determining the loan forgiveness, all of those kinds of items. Whereas the disaster loan, that was that self-generated online process where you're going to have to load in a lot of documents, personal financial statements, tax returns, and all of that. It's our understanding that because this is a 7A loan, the lender will do all the heavy lifting in terms of processing the loan application and getting that information from you. So, you know, the pro and the con is the lender will take care of the entire loan process. The con could be that it's a little bit out of your control at that same time. Plus, you have to wait until your lender is ready to start accepting these programs, these applications, and we've seen anywhere from days to weeks that this process would open up. The important thing, though, is to be in touch with your lender, to let them know you want to pursue this type of loan and that you want to know when they begin opening up accepting these applications, because not every bank will be the same. One of the great features of this loan is no personal guarantees or collateral required. So we anticipate this will be a quick application process. We anticipate this will be a quick funding process as well. One of the really neat features of the Payroll Protection Program loans is this loan forgiveness feature that, based on the time you get the loan and for the 8 weeks following that time, you can be entitled to have a portion of the loan forgiven that represents the payroll costs, rent, mortgage interest, utilities that you incurred during that 8-week window. We have a loan and forgiveness calculator that we have available for you, and I've given you the email address here. If you'll forward us an email at that address, covid@muellerpycpa.com, we will send you out that calculator so that you can see how much you might be able to borrow on this program, and also how much of the loan could be forgiven based on the cost you might incur over that 8-week period of time. There are a lot of rules about forgiveness, and we'll touch on those in just a second. We did have a question come in about, can you apply for the disaster loan and the Paycheck Protection Program loans at the same time, and that's addressed here in the last bullet point. You can't double dip for these kinds of items. So the Paycheck Protection Program is intended to cover salaries, payroll support, mortgage, utilities, and other obligations. The disaster loans are intended to cover other items. Now you can apply for one or the other, but you can't apply for both to cover the same costs. Robyn, anything to add on that, or did I cover that before we go to the forgiveness?
Yeah, I think you covered it, but just to clarify, in case anybody's confused, you can still do the $10,000 and apply for the PPP. It'll just get combined. So that's all I wanted to throw in there.
So as far as the loan forgiveness, and this is an extremely complicated area, we're still working on getting our arms around this particular area in terms of how the loan forgiveness is going to actually play out. And we've got some recommendations for you we'll get to in just a bit. We've got the formula there for the loan forgiveness that once you determine the total expenses that qualify for forgiveness, there's going to be a look back test that says, well, how many full-time equivalent employees, and full-time equivalents is based on a 40-hour period. So if you've got part-timers, you'll have to combine those part-timers to come up with how that equates to full-time equivalents. So it's the full-time equivalents during the period, that the 8-week period, divided by the number of full-time equivalents from January 1 to February 29th of 2020. There's also some optional periods as well. The point is, if you maintain your folks on payroll, and that's what you use this money for, and you either maintain salaries and maintain FTEs, you're going to see a significant portion of that loan forgiven once we get past the measurement period. There's a fallback rule that says if you rehire all your people and restore all their wages by June 30th, 2020, you might be able to get a total forgiveness. You may not have your forgiveness formula reduced at all. So I'm thinking here in Estes Park, a lot of our restaurants and our stores have had to close. If this virus would get under control and we would have a heavy tourist season restart after Memorial Day weekend, our local businesses and employers are going to be in a scramble trying to hire everybody back. And if they could get that done by June 30th, maybe they maximize the amount that can be forgiven. So that's, Robyn, anything else I know there's a lot of rules here. We're still trying to get our arms around all the qualifications. Anything I overlooked?
No, I don't think so. Only maybe to say that the piece that can be forgiven doesn't include any compensation that's reimbursed under the Families First Act, the expanded FMLA and emergency sick leave, which we're going to talk about in a few minutes.
Okay. So you need to get ready. This is for the Paycheck Protection loans. You need to get ready. Again, the lenders aren't ready to take applications now, but the more you can gather information and be ready, the better off you'll be, and the faster you'll get your loan application in. You should pull together your IRS payroll reports for 2019. Let's see, the first quarter payroll report for 2020 is due today, so you should have that available. Pull together those 1099 forms that you might have filed for 2019 for those independent contractors. Begin assembling some of your payroll detail, and we've listed those items here. Wages by employee, tracking things like PTO, health insurance, retirement plan contributions. Get all that information available, because that's going to be information the lender will need in order to determine what you're qualified for in terms of a loan, and then you'll be tracking this information later for the forgiveness purpose. Your specific lender may ask for additional information. So again, the sooner you can have some contact and dialogue with your lender, the smoother you'll make the process along the way. So Robyn and I have three ideas to share. We think these are the takeaways from the loan program. We think you should apply for the $10,000 emergency advance now. And again, I've got the website there to go online and get that amount. Robyn, I have not seen anything yet. I don't know about you, but I have not seen anything yet that says there's a reason not to apply for the $10,000.
No, I haven't seen anything either. I think you can apply for the 10,000 and then apply for the PPP and it will roll in. Now, if you don't need that cash immediately and you intend to apply for the PPP, then maybe you don't do the 10,000 now. But
Yep. And, number two, get ready and gather the information for the PPP loan. And then, to me, the disaster loan is that third source. If you still need more money to keep your business going, there's other costs that are incurred that aren't covered by the PPP loan, that disaster loan application is sitting out there for additional funds if needed. So I see this as steps 1, 2, and 3 that business owners need to be working on. And certainly if you have questions, we'll have some information at the end about how to contact us for additional information as we go along the way here. So somebody asked, as part of this strategy, are there 3 different loan applications? Yes, the $10,000 emergency advance is a component of the disaster loan application. It's the initial step. It's the one that'll take you about 15 to 30 minutes to prepare, and then you click the box and say you want your $10,000 emergency advance. The PPP loan, again, that will be between you and your lender. Your lender will have their own application process you'll have to follow through. And then number 3, that disaster loan for additional funds is an adjunct to step number 1. That's if you want to go further in the disaster loan process beyond the $10,000 emergency advance. Somebody's asking, can Paul roll through the screens for the PPP program? We will have this PowerPoint presentation out to everyone along with a recording when we finish this particular program. We did have so many people sign up for this program. We are, I believe, maxed out right now in the number of attendees. So there's probably about 30 or 40 people that wanted to attend this webinar and couldn't. And we want to get that recording and the PowerPoint slides out to people as soon as possible. Somebody asked about, do owner wages qualify for the Paycheck Protection Program? Robyn, can you touch on that, about to what extent owner wages count in this loan determination?
yeah, no, I can't. I don't remember. So I would have to either defer to you or, so all of these questions, I'm not able to keep up with the responses on the Q&A, but we will get back to you if you'll email us at that COVID@Mueller-Pi if we don't get back to you during the webinar. So we'll have to get back to you on that one.
We just had a super question come in, and I want to stop here for just a second. Pete submitted a question. Is an LLC for a building we rent to our business eligible for the $10,000 advance? The SBA says these loan applications can be done by separate entities that have their own EIN. So if you take a traditional situation where we have an operating entity like an S corporation, a lot of times the owners of that S corporation own their own real estate, their own facility. We refer to that as owner occupied real estate, and it's sitting in a separate entity with its own EIN. The answer is yes, those separate entities can go online to this site and apply for that $10,000 emergency advance. So it is based on EINs. So if you have separate entities with separate EINs, you are allowed to submit loan applications for each of those entities. Pete, thank you. That's a great question. So let's move into the paid leave. So we talked about loans. Now we're going to talk about leave. We have 2 items of leave. This was the legislation that was passed on March 18th. It goes into effect tomorrow. And so, Robyn, both you and I have fielded a lot of questions from people saying, hey, should I hire all my people back? Should I start paying them leave? And I don't know about you, but my answer has been not yet, because it doesn't even go into effect until tomorrow. So all these rules about paid leave, where you as the employer can get reimbursed for this qualifying leave, doesn't kick in until tomorrow. So I'm glad we're having this discussion. So let's get into some of that. Again, I covered some of this on the webinar last Tuesday, but let's just refresh our memories here. There's 2 components to paid leave. One is the expanded FMLA leave that is narrowly targeted to employees who must stay home. They have to take leave because they have a child under the age of 18, because that child can't go to school or to a place of care. So that's a very narrow item there for the expanded family medical leave. It's up to it's a 12-week leave program, just like FMLA is a 12-week leave program. The first 10 days is unpaid, and we'll talk a little bit about what the interplay of those 10 days are with the emergency sick leave that we'll talk about in just a second. Employees can be paid no less than 2/3 of their normal pay rate. So you can pay somebody more. You can pay somebody their regular pay rate, but the amount you as the employer can reimburse yourself for under these rules is limited to 2/3 of normal pay, and a cap of $200 per day up to $10,000 in the aggregate. So again, $200 a day. This is a 10-week paid leave program. After those first 2 weeks, 10 weeks, $200 per day. That's how you get to the $10,000 cap in the program. Some of those other items are pretty standard. The employers get 100% of their money back by holding back their payroll taxes instead of depositing them as they normally would. And if there's not enough payroll tax to fully reimburse the employer for this paid leave, the IRS is rolling out a streamlined procedure to request refunds on them. Somebody asked about tips. That's outside the scope of this discussion. There is some information in the nitty-gritty details here that get into tip type situations, and we'll just have to revisit that on a specific basis. So please contact us with those specific questions, and we'll try to get an answer back to you. We have emergency paid sick leave, and I have put in bold the 3 conditions there. So there's 2 types of sick leave, and they're at different rates. So I have put in bold what I consider to be the direct sick leave, for where the employee themselves is either sick, quarantined, or seeking diagnosis. And then conditions 4, 5, and 6 are those second set, which are sort of ancillary conditions where an employee maybe is taking care of somebody else, or they're having some kind of condition. But those first 3 conditions are the primary direct leave, where the employee is the impacted individual. 4, 5, and 6 is where the employee has an indirect responsibility for somebody else who is sick. And that's going to be important in terms of what sick leave qualifies for reimbursement under those 2 items. So some of the specifics: full-time employees can receive up to 80 hours of paid sick leave. So Robyn, you want to talk about how that plays with the 2 weeks of unpaid leave under FMLA, how this sort of plugs that gap?
Yeah, so if you have somebody who's out to care for a child under 18 because school or daycare is closed, under the expanded FMLA, the first 10 days is unpaid, but you can qualify to get paid the first 10 days and reimbursed under the emergency paid sick leave, under point number 5 there. I think he passed point number 5, but on that previous slide. So, and then I also want to point out, if you have an employee who is working maybe 2 days a week because their spouse is picking up the childcare at home the other 3 days a week, you can get reimbursed for the 3 days a week that employee is staying home. So it can be some intermittent leave. These rules were written to be intended for the employee and employer to collaborate on this. And as long as they agree to it, then yes, you could reimburse or you could pay those employees for the 3 days they're not there and get reimbursed for those, even though they were working 2 days a week. The same applies if they're able to do some telecommuting and work some hours from home, but not all, because they're caring for children. Again, if employer and employee agree to it, that qualifies, and that's fine. And I think that was a question that somebody asked as well.
So Robyn, I'm not really sure. Did you get into the $511 per day and the $200 per day? You were talking about the interplay between these 2 provisions. Before we get into it, let me just pause. We are getting a lot of Q&A. We are watching, and we're trying to catch some of those questions as we go. But let me tell you, everybody, we will stay on as long as we have to when this presentation ends, and we will address every one of those questions. If we have an answer, we'll have an answer. If all we have is an opinion, we'll give you our opinion. And if we don't have either an answer or an opinion, we'll just say we don't know, and that'll give our team something we can follow up on afterwards to try to put together information for you. So in terms of the amounts of this paid sick leave, this 80 hours of paid sick leave, under those conditions 1, 2, and 3. And again, just to refresh your memory, those conditions 1, 2, and 3, this is where the employee is the impacted individual. They are sick, they have been quarantined, or they're seeking assistance. Those individuals can receive up to $511 per day, which is $5,110 if they need the whole 10 days. And that's the amount you as the employer can get reimbursed through withholding payroll taxes or getting an advance from the IRS. For those other conditions, 4, 5, and 6, where the employee has an indirect responsibility, maybe taking care of a child or a parent or some other individual, they can receive up to $200 per day, which again, 10 days, that's $2,000 aggregate. That's the $200 a day that fills in that first 2 weeks that are unpaid under the FMLA coverage, which I believe Robyn already went through that process. So again, these are the amounts that the employer can be fully 100% reimbursed for having fronted these payroll costs to those employees. Again, we will come back to all the questions, but in the interest of time, we've talked about loans, we've talked about leave. Let's talk about levers, because as a small business owner, you have certain levers that you can pull, and you need to know what those levers are. And not all these levers are going to be pertinent to all small business owners, but we wanted to put out there the 6 things we think can help small businesses make a difference through this crisis. And the first lever is to assess your liquidity, to understand what do you have in terms of dry powder available to you in a bank account, in a borrowing capacity on an existing line of credit. We've talked about applying for one of these SBA loans, the disaster, the PPP. There's also other 7A programs like SBA Express that has a 36 turnaround. And by the way, that SBA Express only has 2 S's at the end, not 3 S's at the end. So a little bit of a typo there. Also, going back to that where we talked about earlier about where companies have owner-occupied real estate, there's an opportunity certainly here in Colorado with the big run-up in real estate values that we've had, that you might be able to go refinance that owner-occupied real estate mortgage and have additional equity that you could turn into cash today. I know that's increasing your debt load on that particular property, but that could be a ready source of cash, and we're talking about liquidity right now. This wouldn't be my first choice, but certainly business owners can look at refinancing their homes or obtaining a home equity loan. Again, this is about assessing your liquidity and your access to liquidity. Once you understand where you are right now in a liquidity position, the next step is understanding what your cash flow forecast looks like. And this could be 3 months, 6 months, 6 weeks. It could be whatever you need to project out where you think you're going to be in terms of your cash flow. And this can just be a very simple spreadsheet where you start off with how much cash do you have, how much do you anticipate coming in, how much do you anticipate going out, and where does that leave you with an ending cash balance. You can run this out on several months and get a pretty good idea of how much cash you have, how long you can run before you begin to run out of cash. And we refer to that as the burn rate. How long can you burn through that cash before it becomes a problem? And again, if you'll send us an email at covid@muellerpiecpa.com, we have a cash flow forecast. I will tell you right now, it's an embarrassingly simple Excel file, but in this day and age, simplicity is good. And so if you want that sample spreadsheet, we'd be more than happy to send that to you. And if you need us to jump on the phone and maybe walk you through that, we can do it. But it is simple, and I think it's impactful. Now, once you've done that, so now once you've assessed your liquidity, now you've run this burn rate to say, how long can I run with this cash? Then you're going to start identifying steps to take. And the first one is, where can you slash your costs? Have you contacted your bank for loan deferral options? Has your bank contacted you and offered you a deferment on your loan payments? That would be number one. Number two is to identify your critical cost categories. Every business has fixed costs, things like rent, insurance, loan payments, interest, utilities, those kinds of items. Where you can on those fixed costs, you need to negotiate. If you haven't contacted your landlord and asked for a rent deferment, that needs to be one of your first phone calls after this webinar. You also have variable costs. Variable costs are those that typically track with sales, things like materials, labor, that directly contribute to generating income in your business. If your income has taken a significant hit, if you're not getting any income because you've been forced to close or you've decided to close, then you've got to look at those variable costs, supplies, labor, inventory, those types of items, and you've got to cut those costs. Finally, payroll, which is a component of variable costs, that's something you need to control. And on that note, in the area of payroll, is you need to have an employment strategy. And if you haven't already done this, and I'm sure many people already have, you need to have a list of who your vital and non-vital employees are. And when the cuts have to come, unfortunately, this will help you design a strategy for where those cuts start happening first. But of course, Robyn and I encourage you to contact your HR professional or your attorney to make sure you understand what sort of responsibilities you have in the areas of time tracking, furloughs, layoffs, unpaid time. So first have the strategy and then make sure you consult with your professionals to make sure you're staying within the guardrails. 5, we just talked about the Paycheck Protection Loan and the fact that there's a significant opportunity for most, if not all of that loan to be forgiven. We would tell you to start setting up your accounting system right now to track that 8-week period of time for these 4 categories of costs. The payroll costs that Robyn talked about a little bit earlier, which is more than just wages. You can be health insurance, retirement plan contributions, interest on debt, rent, and utilities. These will be the 4 categories that at some point in time you're going to present to your lender to try to make most, if not all of that loan get forgiven. And so whether you're using QuickBooks Desktop, QBO, Xero, Peachtree, whatever accounting system you're using, we would recommend you create a new account along with sub-accounts. So you create a new account on your P&L to track potential loan forgiveness expenses and a sub-account to track those by category. Because when the time comes for you to present that information to your lender, the easier you can extract that information and have it in an organized fashion, the easier it'll be for you to make your case to your lender as to what you're entitled to in terms of forgiveness. So this is simple bookkeeping and accounting. Please contact us if you need any help in designing this in your chart of accounts to have this show up on your P&L and be ahead of the curve. Finally, number 6, this would be a great time if you haven't. This would be an excellent time to consider these cloud-connected technologies. Today, Robyn and I are broadcasting on Zoom for this particular webinar. You've got options there. There's also GoToMeeting. Internally, we began using Microsoft Teams about 6 months ago, never intending that we would be in this type of situation. And so Robyn, myself, our entire team, we live on Microsoft Teams all day. We're chatting, sending messages back and forth. We're making video calls so we can talk to each other and share screens and information and facilitate our work. There's also Slack is an option out there. And Robyn and I were talking yesterday, when we looked at adopting Microsoft Teams, the funny thing we found out is we were already subscribing to Office 365. We've been paying for Microsoft Teams like forever for when it first came out. And it wasn't until about 6 months ago we realized we were already paying for it. And Robyn, I think it maybe took 20 or 30 minutes for us to figure out how to turn it on and start using it. Yeah. And you want to talk about maybe some of the things we've done with Teams?
Like the happy hours we have on Fridays at 5, we have virtual happy hours with all our offices or with all our people working from home. No, it's great. I mean, you're on Microsoft Teams, you open it up throughout, for the whole day, and you can hit call and you're immediately face to face with a coworker. We can share screens. So if somebody's having trouble with some input or wants to show you something, you can share your screen. So I highly recommend it.
Yeah, it's about as close to being in the office as you can get without being in the office. So
Yep.
Microsoft Teams has worked wonderfully for us. The other areas is look at your, is this the time to move to cloud-based accounting? We see a shrinking number of our clients still continuing to use QuickBooks Desktop, and that puts us, frankly, we're out of sight, out of mind. When somebody has their own QuickBooks on their own computer, we have no access to it. So now maybe this really is the time to consider moving to a hosted QuickBooks situation or a QuickBooks Online subscription where we can have ready access, we can have dialogue, we can have transparency in terms of how you're doing your bookkeeping and accounting, and it just makes us better advisors for you and deliver better services. So with that, we're going to swing into the Q&A section. Robyn, this is going to be kind of funny how we're going to make this work, since I don't know if you want to, let's see, there is a Robyn question from Dan. Do you see that question? They're filling in a 7A loan application. Came in at 940.
Yeah, so I think that everybody can apply. I think, but I'd like to, I need to get my arms around that a little better, Dan. So I'll get back to you.
I'm going, let's see. I'm looking at the chat. Most of the chat is, yeah, they can hear and see me. Yeah, let's get past 9:01 when everybody could see and hear us. I think most of our questions are probably going to be in the Q&A. While we're looking at that, I just want to emphasize on this slide again, we've created this special COVID at MuellerPieCPA.com email address. That is the best place to contact us for specific help. Now, of course, you can send Robyn and myself emails. You can send any of our team mails, emails about needing specific help. But there's an advantage if you use the COVID at MuellerPieCPA.com. Robyn and I created what we refer to as our COVID response team. Some of the more seasoned people in our firm who we are meeting at 1 o'clock every afternoon Mountain Time, which is 2 p.m. in Katy. Our team, our COVID response team, is meeting every afternoon, and we're going to be viewing the emails that are coming in from this COVID at MuellerPieCPA.com so that we're all learning what your questions are, what the information you're looking for, and we get a better understanding of what your needs are, and it helps us learn, frankly, the law as well. So if you can use that website to centralize those requests, it helps us do a better job of making sure we're being consistent in the information that we're putting out. Again, that's also the email address to use if you want that PPP loan and forgiveness calculator and or the cash flow forecast tool that we talked about earlier. Please send a request there. Connie in our office is monitoring that email box right now, and we'll immediately send those tools out to you upon a request. So just wanted to make sure you have that. And also, we are continually updating the COVID page on our website, which I've got the link there, MuellerPieCPA.com. We will be putting this webinar out there later today. The tools will be out there as helpful resources. And as we continue to get updates, we'll continue to update that page on our website. Let's see, we had a question earlier from Nancy. Does payroll include owner's draw for a 2-member LLC? Robyn, I'm going to take a shot at that one. And if you've got something you want to supplement, or if you think I leave something out, just let me know. Typically, partner draws would not be considered compensation in an LLC. And I happen to know this particular LLC files as a partnership. So typically when you're taking distributions because you've got 2 partners who are 50-50, I don't believe that'll be considered as compensation, but to the extent you're paying yourselves guaranteed payments, that is a wage-like payment for a partnership. And I believe we did see that the guaranteed payments would count towards that payroll calculator. Robyn, if you have something else on that, if you've seen something on that.
No, you know more than I do on that one.
Okay. So Teresa, are we at the top of the Q&A? So we have a question from Sarah. So can I apply for more but click the 10K button to get that up front while the rest of the loan is being approved? Absolutely yes. And in fact, that's why we say right now, this morning, go submit your application for the 10K. The rest can follow on later. Let's see, is the COVID-19 relief.sba, I believe, .gov, that is the platform. I'll tell you what, let's bring that link back up. So any of y'all that are interested in filing that, getting that application, there you go. That is the link that takes you to the new streamlined disaster loan application that gets you to the $10,000 advance button. Let's see, Cindy, on the $600 increase of unemployment, what if you didn't even make $600 per week when you were working? Do you still get $600 per week? It's my understanding the $600 is per applicant. So when you apply for, say here in Colorado, if you apply for unemployment and you qualify for, just say $300, well, your weekly payment's going to be $900. Somebody said under 17 is vague. What if child turns 17 in 2019? Then that means right now they're 17 or above, and you would not qualify for the $500 additional stimulus payment for that child. Let's see. Yeah, we have a question about the 10K. It's a pretty involved question with the interplay with the disaster loan. I would ask that perhaps you use the COVID at Mueller Pi CPA to contact us directly because it looks like a complicated situation. Is the $10,000 still forgivable if you don't have any employees? Again, if you don't apply for the PPP loan or apply for further funds from the disaster loan, there is no requirement to repay the $10,000. So I don't know that it's forgivable. It's just not going to be collected. And Robyn, I would think if somebody gets the $10,000 advance and they never have to pay it back or it never gets rolled into a loan, that's probably income they need to report on their tax return.
I thought that I didn't think any of the forgiveness was included.
You know what? You know what? That'll be on somebody's 2020 tax return. That's a year from now. We'll figure that out by the time we get there. Somebody said, how do you apply for an exemption? I'm not exactly sure. Nicole, I'm not sure I understand the nature of the question. Again, if you'll maybe send us a note through COVID at Mueller Pi, we'll get back to you with an answer. That one we answered. Let's see, Mark, if our business is under state mandated closure, can we still use Family First Child Care? Robyn, I think you're a little closer to that particular question. This is where they've been ordered to be closed. Can they use the Family First leave provisions that go into effect tomorrow?
If our business, where'd it go? I just lost the question. Paul, you took my question away. Sorry, the question went away on my end, so I'm not seeing it. And Paul can't hear me that he took it away. Can somebody post it again?
Okay, we have another question from Joel for the paid sick leave. How should we be documenting and tracking this? Just to clarify, if they've already stayed home and we fronted the cost, it wouldn't be pertinent until April 1st. That's correct. If you had been paying leave up to this time, that was before this the Family First Act went into effect. So it was a nice thing for you to do. It's just not available for reimbursement until tomorrow. So it's the paid leave for tomorrow. And what was the other part of that question, Teresa? Okay, Teresa had already closed that, so so we missed that one. Molly, can you apply for unemployment if your business has decreased substantially but not disappeared? Depending on whether you're in Colorado or Texas, that would be more a question with with your particular state unemployment agency, either the Texas Workforce Commission or the Colorado Department of Labor and Employment. If a business is considered essential, but business is off because of future customers, do they still qualify for the loan programs? Absolutely, yes. If we want to clear those, Teresa, yeah, let's clear some of these questions that aren't really questions. Let's see, what about temp employees paid to staffing agencies? I don't have a answer to that. I know there are, just like our firm, I know there's a lot of employers that utilize a PEO, a professional employer organization, to handle all of their payroll. They basically outsource their payroll to a PEO. We're still getting information. In fact, we got information from our PEO just this morning, how they're setting up the tracking for these paid leave programs. So I would tell you to contact your particular payroll provider as well as that temp agency to see what kind of reporting or recording needs to be done in your payroll system by your payroll provider for them to be able to track this sick leave starting tomorrow. Robyn, there's a question here. It says, at one point you said that if you don't need the 10K, then you may just want to skip it and go on to the PPP.
Yeah, and I do want to qualify that comment. So the 10K is designed to be just an emergency influx of cash for those who need it. The risk, if you don't apply now, is that if for some reason you are denied under the PPP, then you've missed out on that opportunity to get the 10,000, I believe. I don't know, I know your particular circumstances, so I don't see any reason why you would be denied under the PPP. So, I think you're probably okay if you want to skip that step of obtaining the 10K because it would offset the PPP loan anyway. But there is a small risk if for some reason you're denied under PPP. I think you've lost that opportunity for the 10K.
Okay, and it looks like we have one question left from Rod. Can my single member LLC used for rental properties file for the 10,000? Looks like they're requiring an EIN. Rod, you're correct. They're requiring an EIN. Single member LLCs are classified by the IRS as disregarded entities and are not supposed to apply for EINs. That's not to say you couldn't go and apply for an EIN. My concern would be if that's a step too far in applying for government money through the SBA loan programs. If you're getting an EIN solely for purposes of trying to get the $10,000 or some kind of a loan, that could potentially be an overreach. So I would tend to discourage going that far. And I think that's all the questions that we have. Robyn, I don't know if you have any closing comments that you'd like to provide everybody.
No, I don't think so. Just please email us at the COVID. We're still learning. You've heard us say a couple of times, I don't know the answer to that. We'll get you an answer. So please don't hesitate. We're here to help. Our thoughts are with everybody.
Did you talk about our team?
No.
You want to talk about our team a little bit?
I'll talk about our team. Yeah. So Paul and I get the privilege of presenting this information to you. But we have 11 people who've been working around the clock really hard, not only to help us digest this information and put this together for you, but also to crank through tax returns and help people get their refunds and answer countless questions from clients. We couldn't do this without them, and our gratitude to them is just, we really can't express it. So thank you guys.
Well, folks, I just want to say we're all in this together. So there'll be more information to come. Again, we'll get this recording out to all of you. Feel free to share this recording with folks. We just want to get this information out so that business owners are making the right decisions and the smart moves right now. So for now, be safe, be strong. God bless.